Hey guys, Jordan from Pre-Condo here. Today I want to talk about this article from the Toronto Star that says more than half of Toronto condo investors are losing money and that's going to hurt renters. So obviously, if you've been on the channel before, you know this is something I've been talking about for a long time. Cash flow positive on Toronto condos is not the norm anymore. It hasn't been for a number of years. And if this is your first time on the channel, please like and more importantly, subscribe. In fact, I would even prefer that you dislike and subscribe and leave a nasty comment into the article. Higher interest rates are pushing the GTA's new construction condo market to a tipping point. There's a new report from Urban Nation. For the first time, more than half of investors who bought pre-construction units as rental properties were losing money last year, creating a scenario that could jeopardize demand for new units. And that's what I want to talk about today. So this report from Urban Nation is fantastic, has a lot of great data. I recommend you read it, but I'm going to go through the most important charts as I see them. First chart here shows the share of GTA newly completed condominiums that are cash flow positive. And you can see that in 2022, the majority of people closing on their newly completed condo, and remember, they would have bought 4, 5, or 6 years ago, they were cash flow negative when you took rents versus mortgage plus property taxes plus maintenance fees. When you look at the actual number here, you can see that the average cash flow position for newly completed condos closed on in 2022 was negative $223 versus in previous years where condos they weren't really cash flow positive, but they were more cash flow neutral. So we're getting to a position now where purchase prices 4 or 5 years ago with interest rates today and rental rates today, you're no longer looking at closing cash flow positive. Again, this is something I've been talking about for a while. Given the prices we're seeing on new launch price lists versus today's rental rates, unless something absolutely insane happens in terms of rental inflation over the next number of years, this is a situation that I think it's pretty much here to stay. So they break the numbers down in a little bit more detail here, and they show that the average rent on a newly completed condo is just over $2,400 a month, and the average expenses, so your mortgage plus your property taxes plus your condo fees, is $2,680 a month. And I also found this chart here really interesting. So this chart focuses on resale condo investors, so people who buy a condo that is existing on the resale market, they close on it, and then they turn around and rent it out right away. And you can see that the average cash flow position for those individuals is even worse than the average cash flow position for pre-construction individuals at an average negative cash flow of $537. And the reason for this is pretty simple. When you buy resale, you are certainly getting a better price than pre-construction, right? You're getting a lower price for a comparable product, but you're also closing on it today and renting it out in today's market. Whereas when you buy pre-construction, you might pay 5, 10, up to 25% more than resale market value, but you're not closing on that condo for another 4, 5, sometimes 6, 7 years. And so over that period of 5 years, we'll call it, rents, of course, continue to inflate. You know, the 45-year rental inflation average in Toronto somewhere around 3%. But of course, in the last 10 years, it has been a lot higher than that. And that is why the cash flow position for pre-construction investors tends to be a little bit better than the cash flow position for resale. And this chart here I found really interesting. Again, I hope you are not colorblind. Urban Nation, while they provide amazing data, they like to keep their graphs really muted, and so you've just got various shades of blue. So the dark blue line here is resale condo prices across the GTA. And you can see that peaked at the same time as detached February of last year, and interest rate hikes took a beating on the market, and they've since rebounded a little bit in the last couple of months. Nothing meaningful, but a little bit of a resurgence in price. But new condo prices, the light blue line here, of course, elevated along with resale. You can see that they've always been more expensive than resale a little bit, but they did not come down as a result of interest rate hikes. And really, that just comes down to the fact that pre-construction condos are priced on a function of margin, right? Developers have to make a certain margin to get construction financing, and costs haven't come down. So without costs coming down, you cannot expect pre-construction prices to come down. In fact, in the last 3 years, costs have gone up dramatically. Really, the two takeaways from this chart is you can see that the price premium you pay for a new pre-construction condo today is at an all-time high relative to the same comparable resale unit. And at the same time, you can see that the gap in rental rate versus pre-construction prices is at the highest level it has ever been at. Inevitably, when people see these charts, the first question they tend to ask is, well, then who the hell is buying pre-construction condos? And the truth is, pre-construction condo sales are down like 70% year over year, right? So the actual buying pool of pre-construction condos has shrunk considerably, and that actually translates to very bad news for rents in the near future. But on the topic of who's buying these, right? Because the old adage is, if it doesn't cash flow, it's not an investment, it's a speculation. And to people who would say that, I would say I tend to actually agree with you. But cash flow positive hasn't existed on pre-construction condos with reasonable assumptions on your rental inflation for 6 or 7 years in Toronto now. But at the same time, investors who have been purchasing pre-construction condos in that last 6 to 7 years have done remarkably well on appreciation. So yes, it may be a speculation, but that is a speculation that has paid off extremely handsomely over the last really 2 decades in Toronto. You know, you go ask somebody who bought pre-construction condos in King West 15, 20 years ago, and you ask, where did you make your money on cash flow or appreciation? They're all going to tell you the same thing. And I know because A, I've looked at the numbers, and B, I have clients who have done just that. And this chart really breaks that down. So you can see that the newly completed condos in the GTA for 2022 had an average purchase price of $472,000 versus the average benchmark price on completion of $703,000. So of course, the average person who purchased 4, 5, 6 years ago to close on a condo today, yes, there are people in bad positions. Those tend to be the people who purchased more recently and need to get out of their contract, but people who purchased 5, 6 years ago are doing remarkably well. I was just looking at a building that recently closed in Etobicoke that we had about 80 clients in, and we had clients purchasing 1 bedrooms for about $379,000 to $398,000. And those same 1 bedrooms are selling on the resale market today for over $550,000. So again, a lot of people have done really well on condos that they've closed on this year. It's just a matter of carrying that negative cash flow if they can afford to do that rather than liquidating and taking the gain. This is a chart that I find fascinating. It's something I've been saying on my channel, and it's something a lot of people don't believe, frankly, when I tell them, but it's something I see very frequently on condo completions. So it's good to see it reflected in the data here. And that is essentially that 1 in 4 purchasers for pre-construction condos in the GTA do not take a mortgage at time of completion, meaning they just close cash. They pay off the whole condo with cash. 1 in 4 is a pretty high number, right? That means that 25% of people going in to purchase a $500,000, $600,000, $700,000 1 bedroom don't actually intend to take out a mortgage on final closing. They have the cash, or they will have the cash ready to just close that condo cash. Now, people will always ask with this chart, well, who are these people? They're certainly not first-time home buyers, and you are right, they're not. It tends to be parents buying for their children or people downsizing. Those are the 2 people I find most frequently pay off a condo on occupancy rather than take out a mortgage. The report actually started off with talking about housing completions per 1,000 population. So if you look at the housing completions per capita in 2022 for sort of the major cities in Canada, it's no surprise, at least to me, that Toronto was the lowest on the list with an average of 4, whereas a place like Calgary did twice as many housing completions as us per capita, right? So when you look at this chart, it kind of gives context to the fact that, well, yeah, interest rates have pretty much doubled in a year, yet prices have only come off 10, maybe up to 15% in some of the suburbs. So really, what's going on? Why is the market so resilient? This is a big part of the reason why. And when you look at population growth over that same period of time, you'll see that from July 1st of 2021 to July 1st of 2022, Toronto alone, so Toronto proper, the 416, saw a population increase of 70,000 people. And the GTA as a whole saw a population increase of 147,000 people. That proves to be an issue when you only seem to be able to deliver about 20,000 units a year in Toronto. So I do encourage you to go read the report because there's a lot of really interesting insights in the data, but I want to show you this takeaway here. The bigger picture issue is that investors may no longer be able to or willing to buy condo pre-sales at the same extent as in the past. This raises the question of reduced new condo demand, new construction activity deliveries, and ultimately rental supply. You have to remember, we build very little purpose-built rental in Toronto these days. We rely on mom and pop investors buying pre-construction in order to provide that rental supply. And now, given the spread in price, right, resale price versus pre-construction price, as well as the spread in pre-construction price versus rental prices, there's going to, of course, be less investors willing to take on the risk of a pre-construction condo. And so really, what does that translate to in the rental market in 5, 10, 15 years? Curious what you guys think about this data. Please leave your comments below, and I'll see you guys next video.